Welcome back, D-traders. We present you our fresh wrap-up of the US trade. Our experts have already analyzed the sentiment of the central banks, markets, companies, and the traders for you. Thus, the US Fed's decision instilled some optimism in Wall Street. In spite of a 0.75% rate increase, the stock market ascended, thus showing support for the Fed's decision to tame record inflation. On Wednesday, the Dow added 1%, the NASDAQ gained 2.5%, and the S&P 500 soared by 1.4% and traded at the high of 3,790 points. However, the main US stock indexes then sank deep into the red zone even before the opening of trade. In this light, the S&P is seen trading in the range between 3,590 and 3,740 intraday. The rally of stock indexes on Wednesday turned out to be the first win for the Dow and S&P after 5 weeks of a losing streak. They continued scoring gains even after the release of the US retail sales report that logged a 0.3% fall. In a while, the US Fed hiked the federal funds rate by 1.75%, the biggest rate increase since 1994. Chairman Powell signaled a similar move could come as the next meeting, but he does not expect 75 basis points moves to be common. Investors are still digesting the Fed's decision, and the second reaction is a total pessimism. During the morning sell-off, the NASDAQ plunged by 2.21%. Meanwhile, the S&P and Dow Jones fell by 1.75 and 1.35% respectively. Since the beginning of 2022, the S&P has lost as much as 22.2%. The Fed's actions have somewhat changed Wall Street's economic growth expectations for the United States. At the same time, analysts still warn about rising recession risks. Notably, the Swiss National Bank unexpectedly adopted an aggressive stance on monetary policy and lifted the interest rate for the first time in 15 years. Meanwhile, the Bank of England increased the cost of borrowing by a quarter point. The top-performing stocks, Apple, Alphabet, Microsoft, Amazon and Tesla, are down by 2.37 and 4.15% today. Morgan Stanley stock lost 2%, while Twitter's advanced by 2.6%. Revlon, founded in 1932, filed for bankruptcy. Investors should stay alert as economic weakness and continuing volatility are harmful to the stock market. As for the US dollar index, it's volatile today. The index tumbled by 0.7% to 104.78 post-FOMC, retraced up to 105 and then plunged again. USD is trading in the range of 103.80 and 104.70 intraday. The forex market today is in no way less volatile than the stock market. The dollar index is fluctuating. The Japanese yen rose by 1% against the dollar, and the pound also jumped by 1.3%. The fresh macroeconomic data from the United States only makes things worse, at least for the new housing market. In May, the number of new houses in the United States declined by 14.4% year-on-year to 1.549 million units, which is the lowest reading since April 2021. Meanwhile, analysts predicted the indicator to stand at 1.701 million units. The US housing market is under strong pressure from rising inflation and mortgage rates. In addition, rising costs of building materials and limited supply make houses less affordable for consumers. US building permits also dropped by 7% to 1.695 million on a yearly basis, the lowest level since last September. Over the past 5 months, the number of permits has been holding about 1.8 million, but it fell for the second time recently. And the data from the US labor market did not meet the forecast as well. The number of new claims for unemployment declined by 3,000 to 229,000, while experts projected a deeper decline to 210,000. As for the USD CAD pair, it's currently trading at the high of 1.2930 and is steadily moving towards the level of 1.30. Given the existing dynamic, the pair is likely to stay in the range between 1.2910 and 1.3010. Today, the loonie keeps depreciating against the American currency. Although the greenback is slowly losing ground, the Canadian dollar is also struggling to find support. Oil quotes are tumbling. Brent crude dropped to $116.68 per barrel, while WTI fell to $113.16 per barrel. The main reason behind this is the remaining fear about a slowdown in the global economy and the low demand. Aggressive monetary tightening by major central banks and repeated COVID-19 outbreaks in China only aggravated these fears. The cryptocurrency market, shocked by recent turbulence, is not doing well. Bitcoin, the largest crypto by market cap, has dropped to an 18-month low over the past 5 days, but then it rebounded from the level of $20,000 per token. In fact, Bitcoin has been hovering in the range between $20,200 to $21,700 for several days. Apparently, the token has no drivers to exit this channel, and the overall background is of a little help as well. After the issue with the Celsius, the new concern arose around a reputable currency hedge fund, Three Arrows. The fund is at a risk of facing insolvency after incurring at least $400 million in liquidation. The short-term outlook for the crypto market remains gloomy. Bitcoin may well decline below the level of $20,000. As for today's trading, the price is likely to break through this level and rise above it to $21,700 per token. As we can see, the market is full of pessimism today, as analysts keep warning about a looming recession. Amid this backdrop, markets will remain unstable and highly volatile, so traders should be very cautious these days. We will tell you about the end of the weekly session tomorrow, and we wish you successful trading and see you soon online.